Well, Bitcoin has been liquid since the day it was created, and so there is no IPO moment. But what we've seen over the last 24 months or so is that changing of who's holding it. You see the ETFs exploding, you see all the public companies buying Bitcoin, but it's actually individuals are saying, hey, I'm willing to sell my Bitcoin now above $100,000 because I bought it when it was $10.
Right.
And so that big markup allows them to go and distribute it. And so I generally look at Bitcoin as an asset that is going to continue to benefit from inflation.
Pompliano begins with a framing device that simplifies the long-term debate. If Bitcoin is not going to zero, then asymmetrically, it is going much higher, potentially to $1 million over time. A decade ago, the going to zero thesis was credible in mainstream discourse. Regulatory risk, technological fragility, and lack of institutional involvement made existential failure plausible. Today, while critics remain, few serious market participants argue that Bitcoin is disappearing. The debate has shifted from survival to valuation. Before we go on, please take a moment to like this video, subscribe to the channel, and turn on post notifications for more content like this. Every action helps with the YouTube algorithm and greatly supports the channel's growth. Thanks for your support and enjoy the video.
Bitcoin is off to a brutal start to the year and is now on track for its worst month since the crypto collapse back in June of 2022. This would be Bitcoin's fifth straight monthly decline, the longest losing streak in 8 years. So, big question, is this a healthy reset for crypto or the start of a deeper downturn? I've been wanting to talk with you about this for a long time because you're a bull about crypto and Bitcoin. What do you make of the slide here? Is this reset just a nice reset, or is there something more fundamental going on?
Well, I think if you just zoom out for a second, right? If it's not going to zero, Bitcoin's going to $1 million at some point in the future. And I don't think that most people think Bitcoin's going to zero. And maybe a decade ago, that was a question. Now people may say it could go down a lot, but it ain't going to go to zero. So I think that's first. The second thing is, I think Bitcoin really has two things that people look at. One is expected, is there's this kind of 4-year cycle that people have gotten used to. And so there's a halving, Bitcoin runs up for about 18 months, it peaks, and then it has these really nasty drawdowns. And you know, the drawdowns in the past have been 85%. Wall Street is not used to that. Wall Street, remember, the global financial crisis was a 50% drawdown. And I always remind people, Bitcoin has had a 50% drawdown approximately every 18 months for the last decade.
Okay.
So these people are used to the volatility, but when you see these numbers compared to stocks, you're like, oh, it's down 50%. That's a lot. The bigger thing, though, is Bitcoin, more so than any market in the world, is a forward-looking market. And so if you go back to why did Bitcoin run all summer long in 2025? I believe it's because a lot of people thought inflation was coming because of the tariffs. And so they said, well, if inflation is coming, just like I thought in 2020 inflation was coming, I'm going to go and I'm going to buy Bitcoin. So Bitcoin ran up. In Q3 and Q4, we realized that inflation is not coming. And so now the two biggest risks in the U.S. economy, in my opinion, are deflation and the contracting liquidity globally. Those two things are a major headwind for asset prices. Bitcoin has been selling off for 5 months. Guess what's also been happening? Truflation's inflation metric has been selling off aggressively. So Truflation is a real-time alternative inflation metric. It uses 14 million data points from 40 different independent providers. It has, in my opinion, more accuracy than the BLS's CPI metric. And it went from 3% down to 0.6%. Now, what's interesting is Truflation has a 97% correlation with a 1-month lag to BLS. And so my expectation is the CPI number is going to fall off a cliff here over the next 90 days or so. And you're actually going to see inflation come down under 2%. Okay. And Bitcoin was the alarm system.
So I hear what you're saying, but I'm looking at other assets that tend to rise when you get a little nervous about inflation or instability. I would put gold in that category, silver. They're still performing extraordinarily well. So, Taylor, you're my metals person. I go to you on heavy metal.
Hopefully not the music.
Do you buy it's good music. Do you buy what Pompliano's saying? Do you think that the run-up in Bitcoin last year was an inflation hedge on tariff concerns? Or does that not square with what we see a lot of other asset classes?
Well, I don't know. And maybe you can debate this with me, Anthony, because this was supposed. So 2 points. I want to answer Brian's question and ask you. You said it'll go to $1 million, and I want to know like why and how we get there. But Brian, to your point, this was supposed to be the big moment for Bitcoin, right? If it is the big diversifier, when stocks go down, when Anthropic comes for Visa and MasterCard or IBM, this was supposed to be the moment where Bitcoin can shine. When the dollar weakens because deflation or whatever, or the Fed Bitcoin was supposed to shine, and we didn't see that. Like that, this was supposed to be Bitcoin's moment, and we didn't see it. And so I don't know the why, but I guess my question too is, if it couldn't show up in this moment, why Bitcoin ever?
Bitcoin was $16,000 in December of 2022. It went to $126,000. It was the best performing asset during that time period. It's come down 50%.
Okay.
That is a normal drawdown for Bitcoin. It doesn't sound that way, but that's a normal drawdown in Bitcoin. I think that what people are realizing is gold, which I think is a very good counterexample to what has happened with Bitcoin. You go and you ask yourself, well, why are people buying gold? People are not buying gold. Central banks are buying
Correct.
gold.
Right.
And central banks are buying gold because they are trying to de-fiat themselves.
Correct.
So they are selling dollars, but they're also selling euros and yen and won and pesos and everything else, and they're going into gold. And so what you have is you have a buyer that is not worried about inflation. They're worried about fiat currencies in general. Now, what I find interesting about the Bitcoin scenario is that actually individuals have been selling Bitcoin. Guess who's been buying it? Businesses, asset managers, large capital pools, pensions, sovereign wealth funds, et cetera. And so my friend Jordy Vitzer's got this great idea of, he says it's basically like the IPO moment for Bitcoin. Historically, if you have a company, you invest in the private market, and then as you enter the public market, there's a changing of hands of who is holding that stock. The early investors or the early employees sell it to the big, hedge funds or the big investors. Well, Bitcoin has been liquid since the day it was created, and so there is no IPO moment. But what we've seen over the last 24 months or so is that changing of who's holding it. You see the ETFs exploding, you see all the public companies buying Bitcoin, but it's actually individuals are saying, hey, I'm willing to sell my Bitcoin now above $100,000 because I bought it when it was $10.
Okay.
And so that big markup allows them to go and distribute it. And so I generally look at Bitcoin as an asset that is going to continue to benefit from inflation. There is no inflation right now. The bigger risk is deflation, and that's why it's selling.
Well, it's an interesting theory that it's moving from individual hands to institutional hands. Okay, fine. There may be a simpler explanation, Jackie. Bitcoin's run-up coincided with massive, massive government spending, stimmies, handouts. That's when individuals had the cash. That's when you walked into the barbershop, every guy in there was talking about buying a crypto. What changed last year was the Trump administration did Doge for a while and said, we're not going to do that stuff anymore. And that maybe took some of the air out of the balloon. So maybe the story's right about going to institutions, but is that a story that gets you to $1 million faster than the story of the individuals buying with the enthusiasm getting you to $1 million?
Geez, I don't know the answer to that question, to be honest with you. I mean, I don't really know what happens with Bitcoin from here, but I would look at this and say to myself, a lot of people were buying because they had cash on hand and then they wanted to take profits. And that's why, to Anthony's point, we're going through these cycles. Does institutional buying get us to $1 million? I'm not necessarily sure, because I think that you'll still see this cyclical opportunity because people don't really feel the way they do with gold and silver, because you can touch it and you can feel it and it's actually backed by something. They don't feel the same way about Bitcoin. I think most of the people who buy it, and probably some of these institutions too, don't really understand it. So I think once they get up to a certain point and they gain some profits, I can see fund managers taking money off the table and kind of just playing through this cycle over and over again. I mean, unless we were in recession, unless the stock market crashed, those kinds of situations.
You need young people to get into the positions of power and influence. The older people don't understand it, to your point, right? They're not used to it. If I want something, I'm going to go buy gold. I'm not going to buy Bitcoin. But when the 22-year-old becomes the CIO at 45, well, guess what? They had Bitcoin in their portfolio, and so they start to put it in the portfolio as well.
Right.
I mean, it could be a generational thing. Quickly, Jerry, I've watched you at jewelry stores with a lot of gold, real gold.
Let's take it to the street.
So, I mean, quick thoughts on Bitcoin's kind of collapse here, what it all means.
Well, I won't speak about Bitcoin. I'll speak about gold and silver and pick a nit with Anthony here. I do think that individuals are buying this. And when I talk to the vendors over in the Diamond District, they tell me they're selling gold bullion. And people are coming in with grandma's silver and saying, what can I get for this? So they're involved in this play as well. But I think that Bitcoin is just much more difficult to get your arms around. I'm on the same page here, Jackie, that you are. I don't understand it. I don't trust it. It's got a big price tag on it, even though it's down significantly.
Right.
So I'm not jumping on board.
Can I make one change to what I said, which would be another catalyst could be if all of a sudden it's adopted as like a central bank currency type thing, then it goes up and it never comes down, because that puts the confidence in it if we're literally using crypto with each other to buy and sell things like you would use cash. That's the only thing that I see that could just send it rocketing up to $1 million, and that's the end of the game.
The day-to-day transaction story, which
it has to become real.
Hasn't quite. Maybe that's how Pompliano buys lunch. It's not how I buy lunch quite yet.
Could Bitcoin reach $1 million? Pompliano implies several potential pathways. One is continued institutional accumulation, gradually integrating Bitcoin into pension portfolios and sovereign allocations. Another is renewed inflationary pressure, reviving the digital scarcity thesis.
So Bitcoin has sold off into early February. It is now looking like it's selling off into late February. This is actually a common thing we've seen before. Now, we don't always get the second sell-off into late February, but it does tend to happen. But the thing that has historically happened in midterm years, whether there's a sell-off into late February or not, is oftentimes there's a little bit of a surge going into the first week of March. Now, we're not quite there yet, but we will be there within a week or so. Okay, so let's go back and look at a lot of the times where Bitcoin's been weak in February in the midterm year. So if you look at 2014, you'll see that Bitcoin was weak into early February, and then it had a slow bleed down into late February. There is a green candle the first week of March, and then another sell-off into April, okay? So weak into February, a little bit of strength in early March, and then another sell-off. Now, what you'll notice is that the first week of March, where it marked a local top. Now, look at 2018. Now, in 2018, February also marked a local low. We did not have as much weakness in late February, but you will notice, in fact, that the first week of March marked a local top. And then we came back down into April. Now, continuing on into 2022, you'll notice something similar, not exactly the same, but some similarities. Weakness into February. You had this local top wick in early March, another sell-off back down, a slight move back up, and then a sell-off into April and May. Okay, and also going into June. So this is a fairly common pattern for Bitcoin to show. In fact, if you look at the year-to-date ROI of Bitcoin in midterm years, so we're looking at the year-to-date ROI of Bitcoin in midterm years, and we're going to add on the standard deviation of 2014, 2018, and 2022, and then compare it to 2026, you can see that a lot of times Bitcoin remains weak into late February, finds a little bit of strength into March, and then sells off again into April and May. Now, there's a lot of people that continue to think that because we didn't have a blow-off top euphoria phase, that the bear market has to be different and that it won't eventually play out the same way. While that may be true, I do still think there's merit to believe that this way of visualizing the bear market isn't necessarily wrong. Now, it's possible that Bitcoin bottoms out before the end of the year, right? I don't want to imply that it can't, but it's just that February has not often marked the actual low, right? If we were in May and Bitcoin were trading another 30 to 50% lower, then maybe it's worthwhile of a discussion as to whether that is the low. But when Bitcoin's trading only 50% down and we're only in February, it's not impossible, especially if you just take that 2019 comparison at face value where it found support at around 6 to 7K, and you can just say, well, maybe this is a 10x that move. But even back then, it still didn't lead to an all-time high. We eventually went lower. Now, that was due to a recession, but the problem is that it still eventually went lower, and it kind of shows you how we always have that date with destiny anytime Bitcoin goes below the 50-week moving average, right? So historically, the way it works is Bitcoin first goes below the 50, then below the 100, then to the 2. The 50, the 100, the 2. Even in 2019, it was the 50, the 100, the 2. 2022, 50, 100, 50, 100, even below the 2. And then now you can see it's been playing out again, right? Go below the 50, go to the 100, and now we find ourselves near that 200-week moving average. So it's all playing out in a very familiar pattern. And maybe Bitcoin will wick down there, maybe it'll go below it, and then it'll get a counter-turn rally. But even then, it's still probably not the actual low for this bear market. It probably won't be. One of the things to remember is that historically, when you look at where Bitcoin has ultimately bottomed out, if you look at the terminal price chart, you can see we have the realized price and balance price on this chart, and historically Bitcoin bottoms when it goes below both of those values, both below the realized price and below the balance price. And while it has gotten close, it still hasn't technically gone below those two price levels. So again, if we were to see that play out, then maybe we could be a little bit more confident in the bear market being over. But with it being only February, with it being that we haven't even hit the 200-week, we haven't hit the realized price, we haven't hit the balance price, we haven't seen the supply and profit and loss even cross yet, it just seems likely that, hey, yeah, we might have a little bit of a counter trend move into March, but it's probably not representative of the low for the bear market. Now, that'll likely come a little bit later, potentially as early as May. A reasonable expectation could also be October, based on the cyclical nature of Bitcoin and how often it tends to find lows approximately every 4 years.
Bitcoin's current drawdown is severe by traditional standards. 5 consecutive months of decline test conviction. Headlines amplify fear. Comparisons to 2022 resurface. But viewed through Pompliano's macro lens, the sell-off aligns with cooling inflation expectations and tightening liquidity, not structural invalidation.